All right. Okay. Welcome everybody. Welcome. So if you're here in person, grab the 4011, a pen if you want it, your nameplate so we can know who you're here, that you're here. Pizza, food. If you're online, go make sure Moodle is up, get the 4011 up. The Moodle module 12 or 13. I did not get as far in doing Moodle updates as I wanted to, so there's not really much in 13 yet, but there will be here shortly after we finish today. All right, so here we go. So we are on session 6, if you can believe it. We are 3/4, or will be at the end of today, 3/4 of the way done. We've just got 2 more sessions to go. So we're most of the way there. And tonight is one of my favorite nights. Tonight is state night. So we're gonna learn all about state taxes today. We're not gonna quite hit every one of those tonight, but we're gonna go through a bunch of them. Next week, we're going to talk about special circumstances. Then we're going to talk about taxpayer cases, final prep in our final week of the training. Tax clinics start on February 20th. That is our first in-person clinic. All right, so for tonight, kind of general updates, then on to the states. So I'm going to focus mostly on non-residents, but as we go through things, when we have something that particularly hits resident taxes as well, I kind of will talk about it there. So they are going to be a little bit mixed in. So if you're only non-resident taxes, please be patient with us. And if you're doing both of them, then you'll at least hear all about one single state at the same time instead of having to go through the list twice. And we'll do some practice to see how we do there. Have a break somewhere around 6:30. Goal is to be done by 8 o'clock or so. The presentation is going to be done, I think, quite a ways before then, but everybody needs some time to practice state returns and their tax layer. Okay, just a quick update for volunteer stuff. So this is how it looked last week, and this week, this is how it looked. So basically, a few folks moved to the side, and we have even more people now that are on 0. The good news is that that's because some people passed the test, which is fabulous. The bad news is we've got 6 people that haven't signed up for anything yet. So if you are a 0 person, I will be reaching out to you again saying, hey, what's going on here? Do you still have the link? Because we do need you to sign up. This is kind of where we are from a tax clinic format perspective. One of the other exciting things is that we've added 2 clinics down at Mankato. So that will be a lot of fun to go down there and do that. Otherwise, things are pretty good, but everybody's moved up. So the people that signed up for those in-person clinics in particular, thank you very, very much for that. Next, we're going to talk about the tax clinic. So we are open for the season. So we opened yesterday. That's when the IRS officially started accepting returns. Yes, so I will show you kind of what we have there. Let's go here. All right, so on the main NRVTAP website, it says, welcome, we're now open. Happy to help you. Click here for more information to request a membership. This is all of that information, who's eligible, click here to request a membership. So all volunteers should go ahead and request a membership. It is fabulous for you to see what all of our clients see. It gets you access to all of the tools when those go live, as they are live. You can also use it to file your return if you meet the qualifications to do that. So you are 100% welcome to do that as well. Those that are not NRVTAP members, so people at different schools. So this is what the North site looks like. So you click on free tax assistance, and then we've got like all of the different options. This is what has been keeping me very busy the past couple weeks. So Lehigh students, click on that. You'll get a membership for the Lehigh membership, which will let you see all of the Lehigh tax clinics. It also lets us customize, like we give Minnesota information for U of M students. We give Pennsylvania information for Lehigh students. App State students get North Carolina information, all that kind of good stuff. So that's why we do it that way. And then when you go in, this is what it looks like. So basically there's 5 tabs at the top, kind of a home page, a page to learn about taxes, a page to kind of get ready that talks about all of your income documents, then actually do your taxes, which has the tools, including this fantastic critical update that we just found out about this morning. So it turns out that although the IRS opened for accepting e-filed returns yesterday, tax slayer has not gotten through the process of getting the IRS to accept 1040 NR returns.
I spent the
e-file.
whole day on the case. I'm so frustrated.
Okay, I'm sorry, somebody's not muted. Yep, thank you. All right. So anyway, so nobody can file their return yet. They can prepare it, they just can't file it. If they try to file it, it gets rejected. Shouldn't be a big deal. I expect that they'll get it fixed in the next day or so and we'll be all good. But just annoying. And then, but if you scroll down, this has all of the normal information. This has the personalized guide tool. It has the link to the tax software. So that is super cool. All right. And then if they want to book an appointment, they can go to the Get Help here. That's the page Get Help. We've got our email for assistance that way, or they can click on any of the options to make an appointment. So I can see that people are already making appointments. They can just go out in time, find the date that they want. This is for the in-person ones here in the Twin Cities. There's a calendar for remote and there's a calendar for office hours as well. So all of those things are out there for everybody to use. And like I said, you're welcome to go through all of those. All right, so that is that. All right, speak wrong way. Come back again. There we are. All right. Talked about that. All right, so membership signups. So historically, we've been able to send out your membership has expired to everybody that was a member last year. And then that would like prompt them to sign up. MemberSpace changed the way that they do things, and that does not automatically happen anymore. So only the people that have gone into it and clicked have signed up so far. And it's about 100 people. Usually when we have that first day where we send out that email, it's like 700 people sign up. So it's a really big like surge. We'll be able to reach out to everybody. So we'll send an email out as soon as the e-file issue is resolved. I don't really want to send everybody to get a membership until they can actually start filing their tax returns. We do have people already signed up for the tax clinic, so we will continue to just monitor that. We've been open for less than 24 hours, so I'm not surprised that we're not full yet because hardly anybody's signed up. All right. The next thing I wanted to show you guys was our 8843 improved tool. So if we go here, so one of the improvements that we're making is an improved 8843 tool. So this is our personalized guide tool. This is where you come in and you answer some questions about yourself, your income, your history, visa history, all of that. I'm just going to do a really simple one, 08/01/2022, just to make life quick and fast. It confirms that you're a non-resident alien. We ask some things about, are you married? Do you have a social security number or not, or an ITIN? If we say no, and if we say that we have no US income, this is an individual that only needs to file a form 8843. And basically what we've got now is we've got a way that they can enter some additional information and then we can fill in the 8843 for them. So all they have to do is print it out, sign it, and send it in. Samaria Clark, that's my name, most days. All right, home, work, just to have something in there. Passport, some made up numbers. Did we apply for a green card? No, we did not. So we can select our school so we can pre-fill in the information and then you can change it if you want to make it somebody else. Continue and then download the form. It's gonna think. And then in 30 seconds, there is the 8843 form, all filled out. So it has all of the, let's see if I can do. Yep, has your F1, has your most recent entry, in country stuff, passport stuff, all of your dates, all of the information filled in there for you. So this should make life a lot easier for the people that don't have to file a full return, that don't have a social security number or an ITIN number. It is not live on the site yet. Hopefully it will go live sometime this weekend. We have testing that we need to do to make sure it's like completely foolproof. But that is kind of what's in the plan. So there we go. All right, any questions about that before we go on? Oh, let's try this. All right. All right. We also have a state residency tool that I'll demonstrate later in the thing. Okay. So let's talk about states. So I'm going to make up some numbers for how I think the states are going to go. Our goal this year, 2,500 returns. Lots and lots of numbers, lots of people to help. Minnesota, 1,500 of them, like 60%. It's going to be a really big number. That's by far the biggest number. After that, Pennsylvania, then North Carolina and California. Maryland, I think we're going to have more. Ohio, I think we'll probably have quite a few as well. We're going to cover those next week. I'm going to throw out Wisconsin at 75. I don't know. Other random ones, another 100 or something like that. So that's my random guess as to how I think the number of states we're going to do. And then of these, another 15% or so are probably going to be people with multiple state returns. So people that go on a summer internship to a different state, or they graduate in the spring and they go work in another state with their new job, or they transferred schools. So we're going to see a lot of state returns. And I'm kind of changing the training up a little bit from last year, just to see, hopefully it'll go well. So I'm going to start easy and then we're going to get harder and harder, just to kind of help build you up to where we need to go. So the very easiest ones of them all, absolutely easy, are the states that don't have any state income tax, right? If they don't have any state income tax, then we don't have to do anything for them, right? When we do that federal return, we're done. Those states are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Wyoming, and Washington. Now, Tennessee does have a tax on interest and dividends, but it's not part of TaxSlayer. So if somebody did have anything like that, they would need to go file that separately, go to the Tennessee Department of Revenue website. So if we have somebody, if they worked in one of these states, then we don't need to do anything about a state income tax return. The next easiest set are the states that we don't train you on, because we're not trained. You guys don't know what to do. I don't know what to do. So if somebody comes to us and they're in a state that we don't train, all we can do is say, we're sorry. We're not trained on this. We don't know how to help you to prepare those forms correctly. We don't know how to review that return accurately for you. We can also say that TaxSlayer will prepare those income tax return forms for that state, but there are a few things that they should be careful of. The guidance, so when you're doing TaxSlayer, it'll give you like a little guidance. Hey, should you do resident or non-resident or part-year resident? That guidance is generally okay if you're a US citizen, but it's not okay if you are a non-resident alien, and it may not be okay if you're a resident alien as well. So you might have to use different rules for determining residency. And sometimes there are special adjustments that need to be made on state tax returns. And we'll talk about some examples of those today, but some big ones are, does the state honor the federal income tax treaty or not? And if they don't, then you may have to do some fixing. Other states may have special treatment of scholarship grants. You may need to do some fixing on that, maybe not. We don't really know. So our best recommendation for those states are going to be, go to the State Department of Revenue website, look at that. They all have like am I a resident or not a resident of this state? They all have a, do I need to file or not? Go through those things, and then that will get you well on your way to filing properly in TaxSlayer. Just to kind of give you a visual of that. So the really dark blue states are the ones that we're going to train you on. And in those medium blue states, those are the ones that don't have any state income tax. Everybody else, the clients, unfortunately, are on their own. If we find states where we get a lot of returns, we can come back to that and say, okay, we need to add support for those. But we'll need to see the demand for that before we try to add any more states, because you guys already have a lot of states to learn about. Okay, so for everybody else, so the ones that we are going to talk about, the first thing that we're going to talk about is state residency. What makes you a resident of a state? What kind of a resident of a state are you? Are you a resident of multiple states? Because that can happen. And then how does the state tax based on residency? Are there special things that we need to know about, like treaties or local tax? And then actually preparing the return, and if there's anything else that we need to know when we finish up. Okay, so with that being said, going from easy to hard. Easy is Wisconsin, California, getting a little harder, North Carolina, Pennsylvania, Maryland are kind of in the middle. Ohio's a little bit further on, and Minnesota is the hardest of them all. And we used to start with Minnesota because that was the one that had the most returns, that had the most people. And it was like everybody was brain fried before we even got done with Minnesota. So we're going to start easy with Wisconsin, our dear friends to the east of us, and work our way up to Minnesota. And hopefully by that point, it'll all make sense, like why we're doing stuff and how it all works. Okay, so with that, let's talk about state residency, because residency is like the immigration tax 4-letter word. Everybody means something different by it. Immigration definitions are different than federal tax definitions, are different than state definitions. All right, so as we look at each of these different states, we're going to talk about what does it take to be a resident for tax purposes of the state. And one of the key concepts that feeds into this is the idea of domicile. So your domicile is your home, in short. So it's the place that your permanent or indefinite home, right? So where you live, where you go back to. Once you establish a domicile, it continues until you take action to change it. So, if you think about where you first grew up with your parents, right, that is going to be your first domicile because that was your home. When you go away to college, that probably doesn't change your domicile right away, right? Because you still have stuff at your parents' house. You go home over spring break, over the summer break, over winter break. It's only when you kind of finally move out on your own and you're not coming back or at least you think you're not coming back, you're establishing a new domicile. And the other key here is that you can only have one domicile. So you can't say, oh, well, I've got a domicile in Florida and a domicile in Minnesota because, the winters suck, pardon my language. No, you have one domicile, whether it's Minnesota or Florida, and then you can just have another abode. You can have a home, a place that you live, but it's not going to be a domicile. So non-resident aliens, student, teachers, researchers, et cetera, that are here on F&J visas are not here for a permanent or for an indefinite period of time, right? All of those visas are temporary non-immigrant visas. They have an expiration date. They are only allowed to be here for a certain period of time. And once that time is up, then they do have to leave. As such, that means that they cannot establish domicile in the United States. So all of our F&J visa holders that come visit us, they are not going to be domiciled in the United States, which makes our life easier for state tax purposes because it's very simple. If you're an F&J and you're a non-resident alien, or even if you're a resident alien, you're not domiciled here. So if a state uses domicile, then it's a very easy answer. You're not a resident. And that is our first one, which is Wisconsin. So to be a tax resident of Wisconsin, you have to be domiciled in Wisconsin. It doesn't matter whether you're physically present or not, but if your domicile is in Wisconsin, you are a legal tax resident of Wisconsin. So all of our folks that come here, F&J visa holders, they are all going to be non-residents of Wisconsin, right? So it makes it really, really easy for them. For somebody that was a US citizen, right? Are they going to be domiciled in Wisconsin? Was their home in Wisconsin before they came to school? Like, are they here in Minnesota going to school and their home is back there? Those are the kinds of questions that we would ask to figure out where their domicile is. Okay. Any questions on that before we move on? So this is like the easiest, lowest bar. Okay. So for Wisconsin, some other general rules. You use the same filing status on your federal return as you do on your state return. Or sorry, your state as your federal. Wisconsin does honor tax treaties. So that's good news for everybody that's there. You pay Wisconsin tax on Wisconsin source income. So if you work at a job in Wisconsin, you're going to pay Wisconsin income tax on it. Wisconsin only taxes the portion of a scholarship or fellowship that represents payment for services. So They should theoretically get a W-2 for that. They shouldn't get like a 1042S with a code 16. And any amounts for, so the service should be reported on the W-2. So if it's not a payment for services such as room and board or a stipend, it is not going to be taxable in Wisconsin. All right, so non-residents, scholarships not taxed, do the treaties, same filing status. So pretty straightforward. Who has to file a Wisconsin tax return? That's a big question. We're going to generally say for this state and for all of them, right? If you have to file a federal return and you have income in that state, you should go ahead and file that state return, even if you're below the income threshold, just so that it's on the record that you filed. Sometimes you're going to be due a refund, even if you don't have to file, you always want to get that money back. The official rule for Wisconsin for non-residents is that $2,000. So if you had wages in Wisconsin for $2,000 or more as a non-resident alien, you'd have to file. If you're a resident, then the numbers vary based on your filing status and your age and all that kind of stuff as well. But here's the table. All right. Wisconsin does have reciprocity with Illinois, Indiana, Kentucky, and Michigan. So basically the idea is if you were a resident of one of those states and you worked in Wisconsin, you don't have to pay Wisconsin tax, you only have to pay, let's say, Kentucky tax. That's fantastic, except we're not trained on any of those states, so we can't really help with that part of it. Most likely the people are not going to be residents anyway of that state, but we have no idea. If they're a US citizen, they could very well be a resident of that state, but generally probably our F&Js won't be, but we have no way to say because we're not trained. So if somebody comes up to us and they say, hey, I thought I have reciprocity with this other state, say, yeah, you might. I'm so sorry. We're not trained on that. You're going to have to go to the website, do some research on your own, and then you can use TaxSlayer. All right. So for us, though, Wisconsin should be super, super easy, right? TaxSlayer should just like copy the information straight over. We'll do some practicing just to make sure it every works. Oops, that's not North Carolina, it's Wisconsin. So your problem or your role as a volunteer, right, is just to check to make sure everything is right. So we're going to be checking probably mostly on the scholarships to make sure those scholarships show up correctly as not being taxable. All right. And then you're also going to want to check the residency because, you know, the instructions on the TaxSlayer page are not going to probably be accurate for what our non-resident alien students need. Okay. Let's do Lisa from Wisconsin. All right. We go back into, let's go back here, go back to here. Okay. Let's make Lisa be from Wisconsin. And we sign in. We go to the practice lab. And we find Lisa. The example. All right. So when we did Lisa last time, we entered her federal return. We entered her wages. We entered her treaty benefits. And she was getting a little bit of a refund. So now we're going to go to the state. We're going to add a state return. You can click or you can select the state here. Clicking is like easy. So let's click Wisconsin and continue. All right. So non-resident is the type we're going to choose for her. And I don't think there's anything. We can look here. Do you want to get notices via email? We're going to just say no. We're going to skip that one. There's no spouse thing. We're not going to do that. No pins. Select your resident state. Let's leave it blank. See what it says. Oh, there we go. That's what we need. Resident of a foreign country. That's what we want. Residency information. Off we go. All right. Other than that, let's see how it looks. All right. So we've got a non-resident return there. I wonder if this will print this for us. That looks like a no. All right. Tax layer, why do you do these things? Okay. Print. Generate PDF. All right. Okay, so here is Lisa's return. Same federal stuff, that's not changed. Everything looks good there. All right, Wisconsin non-resident return. Basically 8,400 in taxable wages. 8,400 in taxable wages. It did some math on it for her. And what is the word? Did she get a refund or does she not? Can't even see. I don't remember. Where do we go? It's all blank. Oh boy, tax there. What are you doing? All right. I will have to investigate that one further. I apologize for that. Because that is, I think, not the way it's supposed to go. But that is the way that it should go, even if it didn't go this way. All right. So all we have to do is enter her information and we should be good to go. All right. Does anybody have any questions on Wisconsin? All right. Let's move on to California. So we do get quite a few students that go intern out in California over the summer. There are a lot of computer science folks from the University of Minnesota, other folks from business schools that head out there. So we see a decent number of California returns. That's why we support it. All right, so California is partially a domicile state. So this is kind of the way California views the domicile. It talks about special definitions, the idea that you can only have one. It's where you voluntarily establish yourself and your family, not for like a special or limited purpose, but true fixed and permanent home, where you leave, where you're going to come back to, the idea. All right. So when we talk about a resident for Canada, so you're going to be a resident if you are domiciled in California, even if you are outside of California for a temporary purpose. You will also be a resident if you're present in California for something other than a temporary or transitory purpose. So the definition of that, and it isn't really a legal standard, it's more like a guideline, is the idea of a temporary or transitory purpose is something like you're simply passing through, or you are here for a brief rest or a vacation. This is California Department of Revenue or Department of Taxation's examples. You're here for a short period of time to complete a job or a transaction or contract work. You would be a part-year resident if you moved into or out of California, starting or ending your domicile or other long-term presence. For our purposes, so our F and J non-resident alien or resident alien individuals are going to be non-residents for California. All right. If you're a US citizen, you probably would be a non-resident if you were just there for a short internship. If you were there, if you moved there permanently and started to go to school, it would probably depend on the situation. It would depend on the specifics of like, did you take everything up and are you never coming back? Or are you just moving there temporarily? Did you move there before you started school or did you move there only to start school? Things like that. So it does get a little bit more complicated. It's not quite as straightforward. All right, but from California perspectives, it's pretty close. It's the same filing status on your federal return as on your state return, or pardon me, state return is the same as the federal. You're going to pay California tax on your California source income, which will be wages from working in California. There is no good deal for scholarships in California. So if you have a taxable scholarship, you're going to have to pay tax on it in California if it's from a California school. California does not honor tax treaties. So if you have a special deal to not have to pay, $5,000 in tax for wages as a student, or all of your income as a teacher, When you go work in California, you still have to pay all of the tax on all of your income there. California also has a health insurance requirement and a shared responsibility payment. Basically, the idea is if you don't have health insurance, you have to pay an additional amount on your taxes. However, this does not apply for California non-residents. So all of our individuals that we help generally should all be non-residents. And so they will not have to pay this like additional cost. And it's pretty spendy. It's like $800. So if you see somebody and they owe a lot of money to California, that's the first thing you should do is check to see if it still shows that payment, because odds are that's still there. Once you get rid of it, then things will be at least a lot better for them. All right. Here's kind of who has to file for a California status. Generally, most folks are going to be kind of under the limit, but if they have any California tax withheld, they should still file anyway. We're going to generally say you have to file a federal and you have income in that state, you should go ahead and file that state just to see if you get anything back. All right. California is also a community property state. What that basically means is if somebody is married, the spouses are essentially like everything they have is joint. So whatever you own, I get half of it, and whatever I own, you get half of it. Whatever I earn is half and half the same way. Community property is based on where you are domiciled again. So this is not going to be something that would affect our non-resident alien or resident alien F&J visa holders. It only would affect people that are residents if they were married and domiciled in California and filing separate returns. I do not think we will have anybody that is in this situation. If we do, we're going to have them send us an email to the tax assistance email account or the one for that particular school. I have contacts out in California that I can get some help on for that because we do not generally deal with anything that complicated. All right, so we're going to do an example here. So we've got an example for Olivia. So she is a senior here at the U of M. She's studying material science. She is single. She was born in September 2001. She provided over half of her own support. Her parents live in Wisconsin, but they're not able to claim her as a dependent. She worked at the U of M in a professor's lab during the school year, and she had a job out in California at the 3M manufacturing plant out there. So what do you guys think? Is she going to be a part-year resident, a full-year resident, or a non-resident of California? She is not an international student, right? She is a US citizen. So it's fair to say if you're only doing the non-resident, you don't have to ask. How about we do a raise of hands? So who thinks that she's going to be a non-resident of California? Raise your hand. All right. What about part-year resident? Raise your hand. What about full-year resident? Raise your hand. What about don't want to commit to anything? Raise your hand. That's okay. All right. So why did Olivia go to this California, right? It was not for getting away from the winter, right? She went there in the summer. She was there for like 3 months for a job. So that is definitely a very short-term visit, right? She was there only to work. She was there for a very short period of time. She is going to be a non-resident of California, right? In this case, it doesn't matter that she's a US citizen or an F/J visa holder or anything like that. What matters is that she's only there for a short period of time and for a very specific purpose, right? And that purpose has an end, right? She's going to be there, she's going to be gone. So this is not to do if she stays there or goes back. This is only the short term. She's going to be a non-resident of California. All right. Again, California returns are part of TaxSlayer. Most of the information will automatically flow. I'm going to say this every time, right? So your job is to be able to check that the California return is correct. You need to know how to fix things. Again, that health insurance payment is the big one. Otherwise, usually we're pretty good about California, other than the stupid statements in TaxSlayer are not always correct and mislead some people. All right, let's see if I can get Lisa to work for California. I think I know why Lisa was bad. It occurred to me. Because I didn't update her W-2. We have to say that her wages were Wisconsin wages. This would be why. So Wisconsin. Oop, I don't want to save and enter another. I just want to continue. All right, there we go. Look at that. Now she's getting all kinds of money back. All right. So if we went back to here again, I'm sure that would be it. I'm not going to do that. So I'm going to fix this here for California now. All right, California. Just like that, magically, hit the wrong button. Continue. All right, now we go down to the state section and select the right one. All right, so she's no longer Wisconsin. We're going to delete Wisconsin. We're going to add a state return. We're going to say California. She's a non-resident of California. Just like that, she is all good. Here is that healthcare responsibility. Did they have the full minimum healthcare? If they do, just say yes. Super easy. If they don't, say no. Then we click on this and we do this. We select the individual. It's going to be Lisa. Full year example, we're going to say non-resident. Just like that, that's all we need to do. And we've made the adjustment so they don't charge for that. So obviously I've done this a few times, right? But basically I did a California return in about 7 clicks, something like that. So when it works properly, the states are very quick and easy to do. And the ones that we're doing, there are no real adjustments. So that makes life super easy. Okay. Any questions about California and Lisa? Any questions online? Okay. All right, let's move on to the first level of complication. All right, so our first few states are mostly residency based on domicile. And it was very easy to say, all right, we're not domiciled here. Now we know what our residency is. The next kind of level of difficulty for states is based on the number of days that you're there in the state. So just like federal residency was determined, if you were subject to the substantial presence test, it's determined about how many days you're here in the United States. State residency in some states is based on the number of days that you were physically present in that state. And we're going to start that fun with North Carolina. All right, so you will be a resident of North Carolina if you were domiciled in that state at any time during the year, or if you resided in the state during 2023 for other than a temporary or transitory purpose. Same sort of stuff that California has. However, they have this nice little caveat in there. In the absence of convincing proof to the contrary, an individual who is present within North Carolina for more than 183 days during the taxable year is presumed to be a resident. But the absence of an individual does not raise a presumption that they are not a resident. All right. So for our purposes, basically, it's pretty straightforward. If you physically are in North Carolina for more than 183 days, so 184 or more days, then you're going to be a resident of North Carolina. If you are not, if you're there for less days, then you're going to be a non-resident of North Carolina. And the fun thing for us now that we get to deal with, so 183 days this year in 2023 was July 2nd, but for 2024, it will be July 1st because of the leap year. All right. So what effect does North Carolina residency status have? So to be a non-resident, again, less than or equal to 183. To be a part-year resident, you have to move in and establish your domicile or have a domicile there and move out, which is not going to apply to us for non-residents. Probably won't apply for any resident citizens, but we'll see. But to be a full year resident of North Carolina, you either have to be domiciled there or you have to be physically present for more than 183 days. So even if you're not there the entire time, if you are there for at least for 184 days, pardon me, you will be a resident of North Carolina. All right. So if you are a non-resident or a part-year resident, you will only pay North Carolina tax on North Carolina income. So if you're working at a job in North Carolina, you'll only pay tax on that in North Carolina. If you are a full year resident, you will pay North Carolina tax on all income earned while you were a North Carolina resident. So basically, you're going to pay tax on everything, essentially, is the way it'll work. So imagine you're there in the spring semester, you go off to California for the fabulous internship, and you come back. Because you're going to be there for more than 180 days, right? You were there in California for about 90. So it's going to be something like 360. No, that isn't going to work, is it? Let's say you were only out in California for 60 days. So 290, whatever it is. You're going to be a resident of North Carolina for the full year. You're going to have to pay that tax on all of your income. Right. Go that way. So there is a form that's used to show the amount of income that you have to pay North Carolina tax on. That's the form D400TC. It only affects your North Carolina return if you actually had income. So it lets you ratio what income you have, how much tax you have to pay. All right. This is their filing chart, like who has to file on their North Carolina website. I think that even though they say it's updated, the numbers don't seem to match very well for what the federal deductions are. So I'm going to check with Kathy to see if this is right, because it seems wrong. But the important thing for us here today, non-resident aliens, if you have any income, you have to file. If you are a resident alien, then you might not have to. But non-residents, you're going to have to file no matter what your income is. Great. Okay. General North Carolina rules. If you file a joint federal return, you must also file a joint North Carolina return if they were both residents or they had North Carolina income. So from a practical perspective, same filing status. The good news is they honor tax treaties, so that's good. We don't have to change anything there. Again, the standard deduction amount for students from India is not the same, is like really not the same. Last year, the federal was $12,950, I think it was, and North Carolina was $12,750, so they were super close. This year, like federal jumped way up and North Carolina doesn't seem to have changed. So that's why I think it might not be good. If you're not eligible for the federal standard deduction, then your North Carolina standard deduction is 0 as well. So only students from India get that super good deal. There is a deduction for qualifying children that you get, but only if you can claim a dependent for the federal child tax credit. And the amount of that credit is going to vary based on your income. All right. Tax returns are due on April 15th. That's not different than anybody else. And you also have to enter the county that you lived in as a part of your North Carolina return. We've got a link here to figure out where that is. You can enter your address and it'll find the county for where you lived. All right. I am not going to do this now, but one of your assignments is going to be, right, our dear friend, Nick. You already did his return by hand. Now we're going to do it in TaxSlayer, pardon me, and you get to do his North Carolina return as well, right? So this is that same information. So based on this, what do you think his federal tax residence, or not federal, pardon me, his North Carolina residency is going to be? So we've got the day count for you. So he lived in North Carolina all of the time that he was here in the US, but he went home over the summer. He went home from May 17th to August 12th. So he was here in the United States for 279 days. So who thinks Nick is going to be a non-resident of California? Raise your hand. What about a part-year resident? What about a resident? Yes, very good. That's exactly right. It's more than 183 days, so he is going to be a resident of North Carolina. All right. The next one, this is Jacob. So Jacob is a scenario for a U.S. resident, so he's a U.S. citizen. He is a sophomore studying at App State. He's studying history. That's the county right there. So his parents live in Charlotte, North Carolina. They're paying for his tuition, room and board. He just worked on campus for some spending money. And his parents are going to claim Jacob as a dependent on their tax return. So what do you guys think Jacob is going to be? Is he going to be a non-resident? Part-year resident? Resident? Yes, he is going to be a resident as well, right? So number one, I would say he's domiciled in North Carolina, right? That's where his parents live. That's where he lived before, we would assume from this, right? So he's most likely going to be domiciled in North Carolina. But number two, right, we don't have anything about any vacations. So most likely he was also living there the entire year. So that's going to also make him a resident of North Carolina as well. All right. Okay, and with that, I'm going to show you. So one of the other tools that we're working on is a way to make life easier. It's all of the tool stuff. Make life easier. Okay, we're going to start here. We're going to say not married. We're going to say that you do have a social security number. We'll say that you have a W-2. No, we didn't make any charitable contributions or student loan payments. We didn't file a tax return. Okay, let's imagine that, see if this works. We're going to just do North Carolina. This is Nick's scenario. All right. Okay. Actually, I need to go back. Okay. Here we go. Let's do it here. Need to make it less interesting. All right. So Nick came in 2022, then he left 05, 17, 2023. Came back 08, 12, 2023. It's been here ever since. Okay. That's gonna work better. They know he's not married. He has a tax ID number. He has a W-2. No charity, no student loan, no return. All right, now when we select North Carolina, it should be more interesting. All right. Okay, so we basically will have the same day counting process that you have for your Am I a non-resident alien to enter your visas. You can enter the same thing for your state visits. You can say 0101, 2023 to 05, 17, 2023. You were in North Carolina. And then let's imagine 08, 12, 2023 to 12/31, 2023. We would just say North Carolina as well. All right. So we've accounted for all of the days that we need to account for. When you continue on, it's going to do the math for the students, and then it'll automatically say, okay, you're a non-resident of North Carolina, or you're a resident of North Carolina, and it'll give them the guide. In the past, we would give them like a sheet that says, hey, you guys do the math. This way, they just have to enter all of their data for themselves, and then it'll do that bit of the work for them, okay? This is also not on the live version, so it will be rolling out here shortly, but that is the second improvement that we're making. Okay. Any questions about that before we move on? So, and that tool only works for the states that we know the rules on. So it's going to be the same, like we'll get to it later, Minnesota, North Carolina, Pennsylvania, all the ones where we care about the days. If you say Wisconsin, it'll say, oh, we know that you're a non-resident alien. We know that you're going to just use the Wisconsin non-resident return and so on. Okay. All right. I'm going to walk through North Carolina income tax preparation just really quickly, just to give you a look at some of the forms. And then we'll see where we are if we want to do Pennsylvania or if we want to take a break. Okay. Same thing. North Carolina is a part of things. Most stuff automatically follows through, should theoretically work. You just have to check it, know how to fix things, right? The biggest issues are going to be like, are they a resident or a non-resident? Did they get the right form based on how long they were living there in North Carolina? And then so there's a form where you can adjust for like your North Carolina versus your other state income. Did they get that form filled out properly so that they don't have to pay tax in North Carolina on other source income? All right. The main form is a D400. There is a Schedule A for itemized deductions, but only charitable contributions would show up on that. The D400 Schedule PN is that part year non-resident form so that you only have to pay North Carolina tax on North Carolina income. There is a tax credit form. This would be credit for taxes paid to other states or countries. Non-residents don't get that form, and there's no local or city tax credit if we have one of those. This is kind of what those forms look like. So, except that's very strange place for, ignore the numbers in there. 400, the part year non-resident. So this is very typical of a non-resident or part year resident form. One column will have like your total income, and then the other column will have your Pennsylvania or North Carolina or Minnesota or California, whatever state it is, that state's taxable income in it. So you allocate the amounts between the two, total versus the state, and then off you go. This is the general form. This is the old form, so obviously I didn't update it, but the forms are mostly the same. All right. What do you guys want to do? Do you want to do one more state and then take a break, or do you want to take a break now? Any preferences? Maybe do one more? Let's do Pennsylvania. Oh, I see a chat. Hopefully they also said one more state. All right, thanks, Julia. Let's do one more. Okay. All right, Pennsylvania. All right, so we're kind of like down towards the middle-ish of the difficulty, right? We're done with the easy. Things are starting to get a little bit more complicated. And we move on to Pennsylvania. Okay, so Pennsylvania residency is kind of like North Carolina, right? You can either be domiciled in Pennsylvania or you can be what's called a statutory resident, which means like whatever laws they wrote, if you meet those laws, then you're a resident. This is like their guidance, like how they talk about domicile. It's a place to establish your true fixed permanent home, blah, blah, blah. They do talk about children in this one, which is kind of interesting. So they talk about a child has the same domicile as their parents or guardians. Becoming a legal adult does not by itself create a separate domicile. You just have the power to have a domicile. So just because you turn 18 doesn't mean you're automatically domiciled somewhere else. This means that you could, if you wanted to, create a domicile. All right. In terms of statutory residency, a person who has a domicile outside of the Commonwealth can still be considered a resident. They're called a statutory resident if they have a permanent place of abode and they spend more than 183 days of the year in Pennsylvania. However, it goes on to define an abode, which is all fabulous. But it talks about other temporary living. So it talks about like barracks or bachelor's offices for like people on a ship or in the military. And then it talks about college dormitories, fraternity houses, sorority houses, and off-campus rentals by students enrolled in colleges or universities do not qualify as a permanent place of abode. All right, so this means that all of our college students, unless they were already previously domiciled in Pennsylvania, they are not going to be Pennsylvania residents. They're going to be Pennsylvania non-residents. All right. So if their family lived somewhere in Pennsylvania and then they came to school at Lehigh, which is one of our school partners, they would be Pennsylvania residents, but basically everybody else is a non-resident. So again, that one's a pretty simple one. There's no counting of days. It's simply, all right, if you're an F or a J, you're going to be a non-resident automatically. If you're not, if you're a US citizen, where did you live before you came to school here? Pennsylvania residents, otherwise probably not. That's the easy part for Pennsylvania. It gets a little bit more complicated. So Pennsylvania taxes some types of income, but they don't tax all types of income. And the particular types they tax are these 8. And those are compensation, interest and dividends, profits from operating a business, gains from disposition of property, think like capital gains from selling stock, gains from rents, royalties, patents, or copyrights, income derived through estates and trusts, or gambling and lottery winnings. All right. Does anybody see a very common type of income that we have at our clinics that is not on the list here? Yes, Richard. Scholarships, that's right. So just like Wisconsin, Pennsylvania does not tax scholarship income. So if you get a full ride there, you don't have to pay any tax on your room and board. It doesn't matter if there's a treaty or not. From a state purpose, right? Federally, you're going to still have to pay tax unless you've got a treaty. But for state purposes, you don't have to worry about it. So for Pennsylvania, so a resident is going to be taxed on all of their income, no matter whether it comes from Pennsylvania or not. Non-residents are only going to be taxed on income from those 8 particular classes that are earned or received or acquired from Pennsylvania sources. So if somebody works at Lehigh University, they are earning wages, even if they're a Pennsylvania non-resident, because that is a Pennsylvania source, right? Lehigh is in Pennsylvania. They're going to pay Pennsylvania tax on those wages. The part-year residents kind of do the same. If it's Pennsylvania time, then Pennsylvania income. If it's not, then it's not. Basically, is the way it goes there. All right. I talked about the scholarships. The other big thing for Pennsylvania is that they do not honor tax treaties. So wages that are exempt for federal tax will be taxable on the Pennsylvania return. So in this situation, you're going to see different numbers on the W-2 between boxes 1 and box number 16. So a really important kind of hint to know, right? If you see those numbers are different, even if the student says, oh, I didn't get a 1042S form to report treaty exempt income, odds are 99.999% that they really did get a 1042S. They just didn't actually receive it, right? It got lost in the mail. It got sent to their home country address. Something happened to it, but most likely the organization that paid them money issued them a 1042S. So if we look at Harold's W-2, right, this is what's going on with Harold's W-2. So as a student from Norway, he gets $2,000 of treaty exempt income. He earned a total of $8,000 in wages. Because of that treaty exempt income, he gets $6,000 reported on his W-2 for federally taxed income on box 1, and he gets $2,000 reported on a 1042S. But because Pennsylvania doesn't honor those treaties, down on line number 16, that full amount, that $8,000, is reported as taxable wages for Pennsylvania. All right. So that's how it's supposed to work. And that's how you can tell that somebody should have a 1042S if they're in a state that doesn't honor tax treaties. All right. Any questions about that? Okay. So this kind of a scenario right here is very, very common for Lehigh students. They will see some amount that isn't taxed, and so their box 1 and box 16 numbers will be different. All right, more Pennsylvania info. So joint returns are only for convenience. There's no difference in tax rate. So if you wanted to file a joint return, theoretically, I guess you could, but it doesn't really make any difference from a tax perspective. Federal returns, it does make a difference, right? The standard deduction is different, separate versus joint. There's all kinds of reasons to do joint if you can. Our folks mostly can't, but that's the case. The other really fun part is that Pennsylvania has a very flat tax. Excuse me. So they don't have a bunch of like different tax rates. So you pay less if you earn less, and then you pay more if you earn more. And hey, if you spend money on this, you can get a deduction. You don't have to pay tax. They are like simple, even Steven. We don't care who you are. 3.07%. So that makes it very simple for withholding. And it means that we almost always, there's never a state tax refund. There's never additional state tax owed. So it theoretically could happen, but it is not common because generally those wages they're not taxable. We know that there's no deductions or exemptions. It's just 3.07%. So the amount that they take out is the amount that they owe. So it means that when we do a student from Pennsylvania's return, when we're looking for, hey, did you file a return last year? Did you owe money? Did you have to pay money in? Did you get a refund for your state? Usually they're going to be even Steven. They're going to say, oh yeah, I filed, but I didn't get anything back. I didn't have to pay. And that's super common for Pennsylvania, not common for Minnesota. But if somebody from Pennsylvania says that, you can feel pretty good that, yeah, they did it right. They know what they're talking about. All right. Pennsylvania, the other kind of wrinkle that adds in to this one, Pennsylvania has a state and local income tax. So, and it's based on where you live for the local tax at the end of the year. So it's based on this school code and this political something division. I forget what it is, apologies. So anyway, these are the codes for where most of our students would be. If they're usually within walking distance of Lehigh's campus, which is our partner out there, those are the codes that they would use. If there's somebody else, then we have the information about how to find the different school district codes and all of that kind of stuff here. All right. Okay. Here's a way to look up school district codes by street address as well. And the PSD codes as well. You can copy that here. So if somebody has to do that, look them up. There you go. The hard part about the local taxes is that they are not in TaxSlayer. So we have like an offline guide where they can fill it out. They can go to a local online site and fill them out electronically that way, but it's not done in TaxSlayer at all. So we can't do that as a part of doing the return in TaxSlayer. They kind of have to do that offline. Pennsylvania also has reciprocity with a whole big bunch of states. Basically, they all address issues of reciprocity among taxation for people that are residents in more than one states, where they're domiciled in one and they're a resident, like a statutory resident in another one, right? Generally, we're not going to worry about any of those with the one possible exception of Maryland, right? Because all of these other states we don't deal with as well. But for all of our students, right, if they're non-resident aliens, they're going to automatically be non-residents of Pennsylvania. They're not going to be a resident of one of these other states as well. They're not going to be domiciled in those other states. All right. So let's talk about our friend Harold, right? We've already talked about him in the past. So he's from Norway. Everybody should have done his return in TaxSlayer, or hopefully has. Came here in January of 2022, has been here ever since. Going to school at Lehigh, worked on campus, so on and so forth. So who thinks that he is a Pennsylvania non-resident? Raise your hand. Is Harold a non-resident of Pennsylvania? What about part-year residents? What about full-year residents? All right. Yes, he is a non-resident of Pennsylvania, right? Because he is a student at a college. Even though he's living off campus, that's totally fine. He's still going to be a non-resident. He's not going to be a statutory resident. He's definitely not going to be domiciled in Pennsylvania. All right. What about Michael? So Michael is a sophomore studying computer science at Lehigh. He's got a 50% tuition scholarship. His parents are from Massachusetts. They are paying for the rest of his tuition and his room and board. He worked on campus in the computer lab, but he can still be claimed as a dependent. What do you think about Michael? Is he going to be a Pennsylvania non-resident, part-year resident, full-year resident? Didn't see a lot of hands. All right. So it's true that I did not say where he lived, right? But I said where his parents lived and that his parents are still claiming him as a dependent, right? Which means that that's still his home. So his home, his domicile is in Boston, Massachusetts. So he is not domiciled in Pennsylvania. He's a college student. He's living somewhere near campus, right? Maybe he's in the dorms, maybe he's got an apartment, but he's not living in like a permanent home. So he is also going to be a non-resident. Even though he's a US citizen, that doesn't really matter at this point. College student, temporarily present in Pennsylvania, he's going to be a non-resident for taxes as well. All right. Any questions about that? All right. Same old, right? Part of TaxSlayer for Pennsylvania returns. Just know how to check it. This is like what the form looks like if you were filling it out by hand. Basically, you put non-resident, you put your name, your address, all that kind of good stuff. It's obviously old because this is the 2021 version. Basically, you copy your income in, put your calculation of your tax, 3.7% or 7%, pardon me, your amount that you owe. If you owe any more, you would put that in here, but like I said, all the time, basically, can't guarantee it. Of course, we can't say always in taxes, but almost always in taxes, it will be a zero and there's not going to owe any money or get any money back. Sign the name, off you go, you're good. All right. And with that, we're going to take a break. Why don't we take a break until 6:45 and then we'll come back and we will talk about Minnesota. All right, I'm going to pause. Okay, so here we go with Minnesota now. All right, so like I said, Minnesota is definitely it's the most complicated of the ones that we're going to train you on. And I don't know how it goes until all 50 states, but it's definitely, I think, up there. Okay, so residency for Minnesota. The first test is, once again, domicile. So if you are domiciled in Minnesota, then you are domiciled and you're going to be a resident for Minnesota for tax purposes. All right. Next. Okay. All right. So students will remain residents of the state in which they have established permanent residency, even if they attend state school full-time in another state, unless they take steps to establish a new residency. So even if you're a resident of another state, even if you're domiciled in another state, for example, if you're a US citizen, you still may be a resident under what's called the 183-day rule. So to change your domicile or your residency, it requires both physical presence and an intent to remain there permanently, indefinitely, the way Minnesota does it. So again, all of our international students, right, Fs and Js, no matter whether they're a non-resident alien or a resident alien, they will not be domiciled in Minnesota, but they may very well meet this 183-day rule. So as you can guess, right, we are once again going to be counting days to say, how long were you exactly here in Minnesota? All right, and so the 183-day rule for Minnesota. So you must have spent at least 183 days in Minnesota, so physically present, and any part of a day counts as a whole day. So when we're counting days, for 2023, right, for one continuous visit, you must have arrived before July 2nd. For next year, for 2024, right, that's going to be July 1st because of the extra day. So you must have spent at least 183 days. And then the second part of it, so it's a two-part test. You must have rent, own, occupy, or maintain an abode. And an abode in Minnesota is a residence that's suitable for year-round use, because some years we actually have winter, and that it is equipped with its own cooking, bathing, and sleeping facilities. And this applies for you or your spouse. If both conditions are met, right, you have to meet both of those conditions, then you are a resident for the time that the second condition applies. All right, so a student coming here for the first time arrives in August. rents an apartment. An apartment is an abode, right? It has its own cooking and bathing facilities, sleeping facilities. They are going to be a non-resident because they were not physically here for more than 183 days. A student living in the dorms, here for the entire year, but lived in the dorms the entire year. Probably that student is also going to be a non-resident because dorms generally do not have their own cooking and bathing facilities, right? You don't have a kitchen, you have to go share a communal bathroom. That does not count. All right, makes sense? Yes.
They also don't count because dorm room contracts still can't get them for some parts of the year. You'll take that like at the beginning of the year.
So that would not automatically eliminate you being that doesn't make it not an abode. So, but the question would be like, what happens when you're gone, right? So like, say you can't be there from, May 1st to July 30th or something like that, right? Do you live in an apartment? Do you live in a hotel room? Do you go home to your home country? That would be the question, is what do you do in that time period? Live with a friend, right? Couch surf, right? If you're living in somebody else's apartment, you're living in an abode, even though you're not paying rent. You don't have to pay rent to meet that second criteria, right? You just have to occupy it. So, make sense? All right.
So living in, so
If you're still, yep. So there's one part is like physical presence, right? But then the other part is this rent, own, occupy, maintain an abode. So let's examine. So let's say you were in the dorms in the spring, right? When do they have to kick you out? When do you have to be gone? Okay. So mid-May until August. Okay. So you're here in the dorm rooms until mid-May, then you're gone. What do you do over the summer? Do you go home? Do you stay like an apartment? What do you do? Sure. So let's imagine that you go home to your home country. Let's say that you're not a US citizen, that you go home to your home country, right? Then you come back in the fall, you're back in the dorms. So you're going to meet that 183 days, right? Because you're going to be here for 150 in the spring and 150 in the fall, something like that. So you're going to be here 270, 300 days. You're going to definitely meet case one. You never rented, owned, occupied, or maintained an abode, right? You were in the dorm room or you were gone. So you never meet the second criteria. Does that make sense? Now, what if you got an apartment, right? You were here in the dorms, and then you did an apartment here in Minnesota, and then you were back in the dorms. You would have met the 183 days, and you would have also rented an abode for a period of time, right? So you would be a resident for that time period that you rented an apartment. For the time that you were not, you would have been a non-resident. This would be why Minnesota is the complicated one. Is that making sense, or is it still confusing? Yes. 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 And the rest of the time, you were a non-resident of Minnesota. All right. I think I saw, oops, Julia, I think it was that you had a hand up.
Yeah, so like let's say you have the first period until May, you're in the dorms, and then after that, your apartment. Do you file those two separately since until May you're like a resident, and after that you're a resident since you're living in a dorm?
We will talk about that in just a couple of minutes, okay?
Okay.
No worries. Yep. Yeah, so this is why I kind of waited, because this one it's complicated, right? It's not easy. Okay, so coming out of this, right? If you are not domiciled in Minnesota, there are basically three sorts of options for your residency status. You can be a non-resident of Minnesota, which means either you are here less than 183 days, no matter what kind of living situation you had, or you were here for more than 183 days, but at no point did you or your spouse, if you're married, ever rent, own, occupy, or maintain an abode at any point during the entire year. All right, and that would make you a non-resident of Minnesota. You can be a part-year resident. So you were here for at least 183 days, and you rented, occupied, maintained, et cetera, an abode for some part of the year. Just some part of it. 1 day, a week, 3 months, 9 months, whatever it is, but not the entire time. And then the final option, you were here for at least 183 days, and you rented, et cetera, an abode for the entire year. So we talked about how you could be in a dorm room and then be gone and be in a dorm room again. And you could either be a non-resident or a part-year resident based on what happened over the summer. Let's take it from the other side. Let's imagine a student that rents an apartment here. They are here in the spring semester. They live in their apartment. They have that fabulous internship that's out in California. They don't find anybody to sublease their apartment. So they pay rent here in Minnesota. They go out to California, they live out there, they're physically gone. They do their work out in California, they come back in the fall, back to their apartment, they live in Minnesota and pay rent for the rest of the year. That individual will be a full year resident, right? Because you don't have to be physically present for the entire year. As long as you're present for more than 183 days, or at least 183 days, pardon me, and you rented an apartment or maintained an abode for the entire year, that makes you a full year resident, okay? And that is, unfortunately, a relatively common situation, and we'll talk about what the implications are in about 2 seconds. All right, so what effect does Minnesota tax residency status have? So only part year or full year residents are going to be eligible for the property tax refund. The other part of it is that, so if you are a non-resident, you will only pay Minnesota tax on income from Minnesota sources while you are a non-resident. So for the time that you are a Minnesota non-resident. If you are a resident, or for the periods of time that you are a resident of Minnesota, you will pay Minnesota tax on all US income earned while you are a Minnesota resident. So our friend that got that fabulous internship, but never subleased their apartment, they will pay California tax on their income, and they will pay Minnesota tax on their income. They will pay tax twice. But hopefully it was a really fabulous internship and they got paid really well. All right. There is a credit for taxes paid to other states called M1CR. The really bad news for us is that can only be used if somebody is domiciled in Minnesota, right? And our non-resident alien or resident alien FJ folks can't be domiciled here in the US. So they don't get to take that credit. They have to pay the tax and they get nothing back on it. So it is a very crappy situation. And yes, we will have, when we talk about people that get unhappy at the tax clinic, usually those are the ones that do, because they had no idea that it had any impact on their situation. And now they owe a couple $1,000s of tax. And so it's never a fun time. Okay, but those that figure it out, that sublease, they're gonna be super good. They will only have to pay Minnesota tax on Minnesota income. They will not have to pay tax on everything that they owe. If that applies, they use the form M1NR. And it's that same sort of form. What is my federal income? How much is my Minnesota income amount? If you only had Minnesota income, your federal column and your Minnesota column would be identical, right? There's no difference between them. It's only if you have Minnesota income and some other state income and you're a non-resident, so that's not Minnesota source, that you would see a difference in those two. All right, if it's only Minnesota income, it doesn't really matter that you're a non-resident because you have to pay tax on all of your income because it's all Minnesota source. Minnesota also has reciprocity with Michigan and North Dakota. Basically, the idea is if you are a full year resident of Minnesota, you don't have to pay tax if you worked in Michigan or North Dakota and vice versa. There is this little fabulous, you must have come back to your home state at least once a month, and your only Minnesota income must be for personal or professional services. Not really been an issue for us at any of our tax clinics, but I suppose it could be. Goes back and forth. If we have anybody that does that, again, we can't help with the Michigan and North Dakota folks, but we can help with the Minnesota part of it. Basically, you have to include a copy of your other state's tax return, and you can get that money back as well. All right. General Minnesota rules. So beyond the super complicated filing residency status. So for the filing status, you're going to use the same status that you did on your federal tax treaties. Minnesota honors tax treaties, pardon me, federal returns. Minnesota honors the tax treaties. So if you have a wage exemption or scholarship exemption, you're going to still get that in Minnesota. The standard deduction in Minnesota is not the same as the federal deduction. Bless their hearts, it is $25 different. I don't know why they can't just change it to be the same. And again, only students from India can claim the standard deduction. Although Minnesota does have some like expanded rules to let other people claim the standard deduction. If you're not permitted by law to claim it on the federal return, you can't claim it on the state return as well. So only the students from India get that. There is also an exemption for dependents that is allowed, but they have to be able to claim that dependent on their federal tax return. Like I said in the past, we'll have probably 3, 5 people, something like that, that will come in. There'll be an international visitors. They had a child that was born here, so they're a US citizen. They are from South Korea, India, Canada, Mexico, India, South Korea. Only do it in that order. They're from one of those 4 countries. And so they would be able to claim that child as a dependent, and they can get the child tax credit. They can get this exemption as well for their dependents. So it's a good deal for the few of them that apply. All right. As if there wasn't enough fun with Minnesota taxes, Minnesota had a surplus of government funds. And this past year, they gave some of it back to people. They sent payments of $260 to individuals who are Minnesota residents and filed a 2021 Minnesota income tax return. They, I think, were trying to get around it by saying that it was a refund for the 2020 return, but the federal government did not buy that. And they said, we're sorry, that is taxable income. Everybody's going to have to pay. And so everybody will have to pay. So it is taxable income for federal purposes. Everybody who got this payment should get a 1099 miscellaneous form. It's super simple. You just go enter it in on the income section. There's a 1099 miscellaneous form. It shows up as like other income. Just put it in as other income. The fun part about it is that it's not taxable income for Minnesota purposes. So we can put it in, but then we're going to have to subtract it for Minnesota purposes as well. And it's not going to count for the property tax refund or any of these other things like that. Yes. They first started getting sent out like in August, September timeframe. So they were direct deposited if they had your bank account information on file, or they were sent by paper check in like an envelope that did not say the Department of Revenue. It was like very easy to get wrong. And then they've been reissuing them, sending them back out to the same address again, because that doing the same thing and expecting a different result is very effective. If you think you have one, or you should have one, you can call the Department of Revenue and say, hey, I think I should have gotten this, but I don't have a check, or was I eligible? They can look it up and figure it out. Yes. I think, yeah. I think, yeah, right? So, I mean, I'm trying to think. So, right, so that somebody had to file a 2021 return. So you would have been like a sophomore, right? Because then junior and now senior. So would you have been working? Well, no, so you're senior now. You would have been like a freshman. I think my math is off here. You haven't gotten one? You got one? Yes. So, yeah. I think we're going to see a decent number of them, in all honesty. I think we're going to see a decent number, but it's not that hard. The entering the income document is super easy. It's very obvious. And then we have like a little 2 or 3 pages of like, hey, here's how you do the subtraction. It's not hard. And like worst case scenario, so Minnesota taxes start at 5%, right? So 5 times 260%, that's what? $12 or $13 of taxes if I'm doing it right. Something like that. So it's not like the end of the world if they mess up on the subtraction. They should, though, definitely enter it because all of this was reported to the IRS. So they will balance the books and say, hey, we think you had this, but you didn't include it on your return. Here's a letter saying, can you fix this problem, please? Or we made a change on your return. So anyway, the fun for Minnesota. Okay, any questions on that one? Any other questions on that? Any questions online? Okay. All right. So one more, continuing with the fun for Minnesota returns, one other fun thing. So when you are married, right? You are married. It doesn't matter who your spouse is or where they live, you are still married. On your federal return, you're going to use the married filing separate status. If your spouse does not have a social security number or an ITIN, which is relatively common because most of them, if they're here, they're on an F2 visa. If you're on an F2 visa, you can't work. You can't have any employment. So you can't have any income and you can't get an ITIN or a social security number. If you're on a J visa, there's a chance you might work, but generally they will not. And if they're in their home country still, then they definitely won't have a tax ID number. If you are married and your spouse does not have a tax ID number, you can file electronically on your federal tax return. There's like a couple of special things you got to do. You can have to be kind of very strict about following the process, but you can do it. You can make it work. And if you mess it up, you can delete everything and do it again, and that will make it work too. Or you can just give up and print and then mail it in, which works as well, but it just takes longer to get your money back. If you are in Minnesota and your spouse does not have a social security number or an ITIN number, you will not be able to e-file your Minnesota return. So they can do the federal e-file, but they can't do the Minnesota e-file. They'll have to print that thing out and sign and date it and send it on it. If their spouse does have a social security number or an ITIN number, they can do that. All right. Same applies, thank you, Kathy, to North Carolina about the spouse without a tax ID number. And I'm pretty sure the same applies to Pennsylvania as well, although I am not going to guarantee that because I can't remember. So I think this is a relatively common problem, even though it's not that common of a situation. All right. Okay, let's talk about Lisa, our very first friend, Lisa. All right, we remember, right? F1 student from China. She came here in 2021. I changed it. She did get the payment. So you guys get to do a payment for her. She lived off campus. She worked on campus. She filed returns. What do you think her Minnesota residency is? Is she going to be a Minnesota non-resident? Raise your hand. What about a part-year resident? Raise your hand. What about a full-year resident? Raise your hand. Yes, that's right. Yes. So she was here the entire year, physically present the entire year. She lived off campus for all of 2023, and it qualifies as an abode. All right, so that's why that phrase was on a bunch of the scenarios. We didn't just get to it until now. All right. Sunil, what do we think about Sunil? F1 student from India. Is he going to be a non-resident, part-year resident, full-year resident? Yes, he's a full-year resident as well, right? Super simple. Again, here the whole time, lived off campus, no issues. What about Emily? So Emily is a US citizen. She is a junior studying entomology. Parents are from Apple Valley. They're paying for her school and for room and board. They're claiming Emily as a dependent. She had an internship at the summer at the U of M B lab, and she lived in an apartment. Is she going to be a non-resident? What do you think? Resident, part-year resident, part-year resident? Need to keep it in order. Resident, full-year resident? Yes, that's right. She is actually domiciled in Minnesota, right? So she is a US citizen. This is where she's from. Her parents are here. She has not flown the coop, so to speak. She is going to be a resident as well. All right. What about Olivia? Right? We already did Olivia's residency for California. What do we think about Olivia's residency for Minnesota? Right? What do you think? Is she going to be a non-resident? What about a part-year resident? Full-year resident? Shall we walk through it a little bit more? All right. Okay, let's walk through it. So first thing, right? So her parents live in Wisconsin, right? So she's a US citizen. It's not explicitly stated, but that's what we're gonna assume here. All right. She earns too much money, so her parents can't claim her as a dependent, right? But that's where her parents live. So probably that is her domicile, right? Is still in Wisconsin. So we know that she was out in California for at least 3 months, right? Now we don't really know like what her apartment situation was, or if she was in the dorms or anything like that. If I was going to guess, which is a terrible thing to do in taxes, right? I would say that she's probably going to be a non-resident, right? She was probably here in the spring, rented an apartment, went out to California for her job, subleased her apartment or ended her lease, and then came back in the fall and started an apartment again. But we don't really have enough information to say for sure what she would be. So those would be the kinds of questions we would have to ask her. Where did you live when you were in Minnesota? When you were not in Minnesota, what did you do with where you were living? Did you still pay rent? Did you sublease it? That's the question. Okay. All right. Let's talk a little bit about Minnesota tax return preparation. Same thing again, right? It's all a part of the TaxSlayer software. Generally, it's pretty good. Property tax refunds need help. We're going to talk about that next week. Again, usually for a standard Minnesota return, there's not a lot of futzing. Obviously, the stupid refund payment thing is going to need some fixing, but otherwise it's pretty good. Yes. Yeah. Yes.
And came back, and was she not be a part here?
Yeah, she would be a part year. So if she left and she wasn't paying rent anymore, then she would be a part year.
Oh.
Yeah. So which would have been a good deal for her. That would have been the way to go. Yeah. All right. Okay. All right. Yep, the residency statements are not correct. They assume that you're a US citizen, not non-resident alien. All right, let's talk about the form. So the M1 is like the main Minnesota income tax form, the M1W. So when you file, if you were to file your return on paper, if you filed a federal return, you would send in like the little copies of your W-2 forms with your federal tax return. Minnesota scans all of the documents, so they do not want the little tiny pieces of paper. So they have you fill out an M1 form or M1W form, which is a full 8.5 by 11, so that it can run through the scanner. It just has that W-2 information. What are your wages? What's the ID number for the employer? How much Minnesota tax was taken out? The M1SA is for itemized deductions. That would only be charitable contributions for our non-resident aliens. The M1NR is when you pay tax, so you only pay Minnesota tax on Minnesota income. If you worked in another state, there is a Minnesota student loan credit. So if you did have a student loan interest that you were paying back, you can get a student loan credit as well. We might see one or two of those. So it's very uncommon, but we do get a couple. Usually if you're doing this, if you're doing it on paper, you do all of the supporting forms and you do the M1, just like when we were doing the federal on paper, right? We did the 8843 and the Schedule OI and the Schedule A for itemized deductions. We do all of those supporting forms first, is those all copy information over onto that final federal form. For Minnesota returns, you start with your federal return information and then you basically do some math there. This is the M1W, just to give you a quick look at it. Basically, room for W-2 stuff, room for 1099 stuff. The Schedule SA for itemized deductions. Basically, charitable contributions are the only ones that we would ever see, like lines 15 and 16. The M1 income tax. So this is the next thing that I wanted to talk about. One of my other favorite things. All right. So campaign funds and our non-resident alien clients. All right, from the Federal Election Commission. So federal law prohibits contributions, donations, expenditures, and disbursements solicited, directed, received, or made indirectly or directly by foreign nationals in connection with any election. Basically, the federal government says, if you are not a US citizen, we do not want you messing around with US elections and giving money to influence US elections. So you can't contribute, you can't make donations, it's a violation of law, so on and so forth. So should our international students click a button there to say, we want to have money go to the election campaign fund for this particular political party? I'm going to say probably out of an abundance of caution, it would be good to say no. Probably you should just say, leave that blank. Is that going to get you kicked out of the United States? I would say almost certainly not. But, you know, why take any chances on anything like that? Just leave it blank. Just leave it blank. If you are F or J visa holder. If you're a US citizen, then put however your conscience tells you to do. All right. Second path of the M1, basically you start with the federal adjusted gross income, you add some things, you subtract some things, you get your Minnesota taxable income, figure out the tax, off you go. Part year residents and non-residents do a ratio on the tax. Sometimes it can be a little bit weird because they do a ratio based on the total amount of tax. So they say, like, if this was all Minnesota income, you would owe $10,000. But only a third of it was Minnesota income. So you only owe 3,000. But if your Minnesota income had like started at the 0 and then the lower brackets, it would have been less than 3,000 if you did it that way. But because they do it as a ratio of like the total income, you end up paying more than like just the individual brackets, if that makes sense. So it kind of gets you there a little bit. It's okay. Back half, basically, there's some credits. Anybody that wants to, there is a Minnesota Non-Game Wildlife Fund, so you can make a charitable contribution to that government agency that distributes the money for supporting nature and parks and other things like that in Minnesota. If you want to read about it, you can. It's pretty cool, but it does affect your refund. So it's like money out of your pocket. You put your tax withheld, you get a refund or not. You can put direct deposit if you want to do that, or you can pay when you come to pay. So if you have not filed a tax return in Minnesota before, you cannot pay online at the Minnesota Revenue website. You can only make a payment online if you filed a tax return with Minnesota before. You can pay when you file your tax return, and then it'll work just fine. You can do like a withdrawal that way. Or you can mail a check, or you can go down to them, like their office is over in St. Paul. It's right on the light rail, so it's super easy to get to if you want to pay them in 1,000 pennies or whatever you want to do. But you can't go onto their website and make a payment if you haven't filed before. So, because your social security number is not in their system and they don't like it, which is terrible, but such is life. All right, and that is Minnesota. Any questions about Minnesota? All right. So it's definitely the more complicated one, really about the idea of residency, right? And the idea that you can, as a Minnesota person that lived in Minnesota, right? You can be a resident for the full year. You can be a resident for parts of the year, for different periods of the year, or you can be a resident for none of the year, a non-resident. So part year, full year, non-resident. Okay. Next week, we'll do Maryland. Next week, we're going to do Ohio. Let's do some work. Okay. So for the rest of tonight, you're going to work on returns. All right. So non-resident returns, we want to complete the returns for these individuals, right? You've already seen these scenarios. So let's do the returns. We're going to do Lisa. We're going to do Sunil. We'll do Nick. We'll do Harold. We'll do Kim. So some of you have already done Harold and Kim. So if you've already got them in TaxSlayer, right, it's going to be super easy to do. You're going to just get to do like the 3 or 4 clicks, maybe a few more clicks, but it'll be super fast like that. If you already had entered Lisa and Sunil when we had our first TaxSlayer session last week, when we were doing it then, you're going to be steps ahead. You'll just have to enter Nick because you're only one. If you haven't entered any of them, you haven't gotten to that, then you've got a lot of work to do. We're also going to do resident returns. So I would say do the non-resident first, and then we'll do residents. So these residents are the ones that we talked about tonight. Jacob, Emily, Michael, and Olivia. All right. They're all relatively simple resident returns, very representative of like the students that we would actually see at our tax clinics. All right, and then we're going to have one new scenario entirely, which is a federal and state tax return for Elena. All right. And Elena's situation here. So Elena is a student from Bolivia. She came here in August of 2023. She lived in an apartment off campus for the fall semester. It qualifies as an abode, and that was her rent. She received a full scholarship, so she was doing really well. Covered tuition, room and board, and they gave her a monthly stipend. All right, her total tuition was this amount, and then she spent some additional money on books. She's studying tropical reforestation methods here at the U of M. This is that information here. Here is the 1042S that she received. All right, they loved Elena. They really, really, really wanted her to come. They offered her lots of money and they gave her $26,000. All right. All right. So the presentation is already out on the shared or on the Moodle, pardon me. So I don't have Elena's scenario printed out for us tonight. If you get to it, all of the other scenarios are online from our previous examples. You can go back to them. The one other change that I would make is that we're going to say that Lisa, our poor good friend Lisa, she got that $260 payment. So we're going to need to enter that for her as well. Okay. Yes. It's because I don't like you at all. You're the only one. Everybody else has access. I'm sure that nobody has access. All right, I will fix that first. Then we'll go from there. All right, any other questions? Okay, all right. Okay, I'm gonna stop the recording. Thank you all. So we're gonna just keep working until 8 o'clock, 8:15-ish, so another 45 minutes. I will also, we can't stop. Hang on, there are more slides. Oh my gosh, Maria. Sorry, I was all thrown by Nolan's question. Okay. So complete all of the returns. That's your homework, right? So I'm going to do Moodle assignments for everybody to submit them. Those aren't up yet. I got behind dealing with launching sites, so they are not out there yet, but they will be out there, some tonight, some tomorrow. So all of those returns will have their own assignment. Just do the tax layer, finish it off, send it in. Should be, hopefully will be relatively straightforward. Our next session will be fun. So we're going to have the U of M Low Income Tax Clinic is going to come talk to us, give us a little info about what they do, about how they can help our clients, about how you can help the clients that they can help as well. We're going to talk about Maryland and Ohio. We're going to talk about working in multiple states. We're going to do Minnesota property tax income or property tax refund. We're going to do when treaty benefits don't match, when there are problems. So lots of fixing. And then we'll do tax layer FSA, give you a demo of that. Our final one in 2 weeks is our last training session. We're going to talk about NRVTAP leadership opportunities for 23-24. We're going to talk about some complex cases, like, right, if you can get through these, you are going to have no trouble with anybody you're going to ever see at the tax clinic. We're going to talk about the clinic as well, like what is it like, what to expect. We've already talked a little bit, but we're going to talk about more. Moodle final readiness check, right? So before we can turn you guys loose on our poor unsuspecting students, we need you to complete a few returns, answer a few questions, make sure that you know what you're doing on tax layer, on FSA, on states, on the federal non-resident and resident returns. It's not going to be as hard as the IRS foreign student test, I swear, you know, and this is not something where I would say that you can fail, but you can keep taking it until you pass. We will also hand out t-shirts to everybody. We'll have food from Raising Cane's. If you want to, you can do your own return then as well. If you're an international student, you're going to get a 1042S. You can't because you won't have that document yet, most likely. But everybody else, if you want to do your return, you can. Get your money back first before we help a bunch of other people. All right. Now, any questions? Now we're at the final. Okay. All right. I will go fix the sharing and I'm going to stop sharing. I'm going to stop the recording and we're good to go.